If someone bumps into you on the street and slips your wallet out of your pocket, you notice. The violation is physical and immediate. But when a digital checkout screen quietly tacks an extra 12% onto your order, it feels perfectly normal. You go to work, you don't gamble, you avoid luxury cars or designer clothes. You follow the textbook rules of being responsible with your money. Yet by the end of the month, your bank account feels suspiciously light. The biggest threats to your financial stability aren't obvious blunders like a terrible real estate investment. They are the small, completely ordinary routines that hide inside your daily schedule, disguised as common sense. We live in the comfort economy. It is a massive, highly optimized system engineered specifically to bypass your financial logic by offering you the one thing you are too exhausted to refuse: convenience. You aren't actually bad with money. You are simply operating inside an environment built on 3 psychological pillars designed to extract your wealth without triggering a single alarm. The first pillar relies on taking convenience, which used to be a rare luxury, and turning it into a mandatory tax on your daily life. A $15 delivery meal breaks down like this. Once fees and the tip stack up, you're paying $30. Doing that 3 times a week costs you $2,300 a year, purely for the privilege of not walking to the store. Apply that exact same math to your workday. Buying a $12 lunch every day instead of a $5 home meal creates an $1,800 gap every single year. This entire segment of the economy operates on a very specific assumption that you will categorically refuse to do the math on a purchase if the price tag is under $20. Every single time you choose the path of least resistance in your daily routine, you are quietly paying a frictionless tax. The second pillar relies on emotion. If companies can wrap a transaction in the right feelings, your brain bypasses its own critical thinking. You have a really hard week at work, so you order a nice dinner on Friday just to reward yourself. Within a month, that one-time reward turns into an unquestioned weekly line item. You stop evaluating the cost because you categorize the expense as self-care. Retailers use a similar trick with sale prices. By inflating the original anchor price, they shift your brain's primary question from, "Do I actually need this item?" to, "Is this a good deal?" Tech companies run this playbook perfectly through planned psychological obsolescence. They release a slightly shinier phone, making your perfectly functional 2-year-old device feel outdated. You upgrade not because the hardware failed, but to signal to everyone around you that you aren't falling behind. When an expense is successfully framed as a mental health necessity or an incredible bargain, it sidesteps your wallet's defenses entirely. That brings us to the final pillar, the traps built entirely on your own complacency. Think about your streaming services. You keep paying $15 a month for platforms you almost never open, simply out of the vague fear that you might want to watch something just in case. And when you finally muster the energy to click cancel, they immediately offer you 3 months for the price of 1. If they can afford to slash the price by 70% the second you threaten to leave, the service was artificially inflated from the start. This graph shows money in a traditional savings account. The blue line is your balance growing at 1% interest, while the red line tracks a 4% inflation rate. As inflation outpaces your interest, you lose thousands in real value in slow motion. Add in the laziness tax of a forgotten $35 utility bill. That single late payment can ding your credit score, ensuring that every future car loan, mortgage, or insurance premium comes with a higher interest rate. In an economy running entirely on automation, taking a passive role ensures you are financially penalized at every turn. When you add up the delivery fees, the unquestioned upgrades, the idle subscriptions, and the late fees, these tiny daily choices compound into tens of thousands of dollars lost over a decade. If it feels impossible to get ahead, it's because you are trying to navigate a maze built entirely to extract your resources, using your own predictable human nature against you. Building real wealth doesn't necessarily mean waiting for a massive promotion or doubling your salary. It starts with finding the leaks in your current lifestyle and plugging them. Put the friction back into your spending. Cancel the apps you don't use today. Put your recurring bells on autopay to protect your credit, and force yourself to wait 24 hours before checking out an online cart. True financial autonomy doesn't require living off rice and beans. It just requires making sure that every single dollar leaving your account is a conscious decision, rather than an unexamined habit.